All right, welcome to the part-time live traders session. In fact, it seems we have a lot to discuss in the chat, so I'm not going to be wasting much time in this preamble. Let's just move on straight and conduct this analysis with first looking into the Forex Factory economical calendar to see those high impact news events that are scheduled to happen tomorrow. Okay. All right, let's see the Forex Factory economical calendar. This is it, and we have quite a few high impact news announcements for tomorrow. The most important, of course, is that coming from the Canadian dollar axis. This is more of another NFP news event, a similar event for the Canadian dollar crosses. Okay. All right, so you want to be careful trading all Canadian dollar crosses. Of course, we will be live in the market trading this news event. I am sure it's about 30 minutes to this news event is going to be 30 minutes to our normal live trading session. So we are going to be in the market to observe that news announcement. Okay. All right, the other ones, Reserve Bank of Australia monetary policy statement will be released early tomorrow morning, so that's quite an early one. Then one normal high impact news event coming from the sterling pounds axis. All right, now let's quickly look into the charts and discuss our analysis with most of those sterling pounds crosses being most of the those higher quality signals coming in the very long term, so we are going to pay attention to them very strictly. Okay. All right, we are now looking into the sterling pounds against the New Zealand dollar. This is the daily time frame. Actually, I will even like us to begin with the monthly time frame, or even possible the weekly time frame. Okay, but from the monthly time frame here, you will see how price has been in a small channel formation. Can you see that? And the overall directional bias in this type of channel formation usually ends to the downside. Okay, for the continuation move, it's more of a push to the downside, flag with that sideways price behavior, which is of course typical for a retracement price action, then the breakout for a continuation of this original trend that we had pushing to the downside. Okay, that's what has been going on in the monthly time frame. Let's see the weekly time frame. Weekly time frame, let me just see if I can draw that flag pattern. It's quite difficult, but let's say that connecting these lows to that, price has been respecting that level, so we'll change this line to blue line. Let's give it that blue color. That's our weekly color, so blue. All right, high, let's see the high, the highs here. This one here has been messed around that area. Okay, price has damaged that one. Similarly, this one here coming around that same area, in fact, has been damaged. So we'll be analyzing price around this area. That is the little price action that we should be analyzing, and this usually should fall around the daily time frame. Okay, so in the weekly time frame, we only have this level, that line there, and which one again? This one is still quite far, but we can just keep that level. It's still quite far away, but let's just keep it for the sake of discussion. That one here, still very far away. In fact, it seems we got a breakout congestion continuation pattern. Let me see if I can show you that. It's a past price action. It seems it's a breakout. All right, that's the level of support, that's the breakout, this is the congestion, and this is the continuation pattern. Anyway, that's played out. I'm just seeing that right now, and I needed to let you know. Okay, so in the weekly time frame, these are the two possible levels of resistance where you might also want to draw, connecting these highs. but both of them are still quite far away from a current price level. So let's take out this. Even if price is pushing to the upside, it's going to come around that area. We are going to be not in this area with time that we have a point of confluence. Okay, so but it is still too far, so let's not over stop our chart with so many lines. All right, so now let's analyze this area in the daily time frame. Daily time frame, sterling pounds against the New Zealand dollar. What's been going on here? Well, you might want to draw those levels of support and resistance in the daily time frame, trying to figure out the very pattern that is likely to happen here. We have this obvious swing high, but it seems we are having some lower swing lows right here. Okay, so I wouldn't want to just keep that one there. I would like to take into consideration that lower swing high, and you can see again some lower swing highs right there. So let's just connect all of those swing highs. Let's connect them. Be very careful and be very accurate with your lines. All right, that's it, well connected. Okay, all right, so I'm going to change the color of this line to red. That's our color for the daily time frame, and keep it within the daily and the hourly time frames. Okay, that's it. Right to the bottom, we should have this level here as support. That's a good one. This one here should come in the 4 hours time frame, not in the daily time frame. I am also seeing the possibility of channel formation, either somewhere here or somewhere here, something like that, but this level is valid, so let's keep one here. This is the most obvious swing low in the daily time frame, but since we have a leaning line right there, we are likely to find another leaning line somewhere. So let's just this is the area. I already have some harmonic bounces of that point. Probably I should let me zoom out this chart so you can see those are the harmonic bounces already, so it's still quite hidden, but let's just keep them. Okay, all right, so that is it. Maybe something here. It's still quite far away from current price level, still very far, so I am actually going to delete this one. So let's just keep the closest, this one, and this one here. Okay, now what's significant here we find in any trading opportunity for the long-term traders? Well, it seems so. We have price respecting this area, and for today, what happened? Price went all the way, trying to breach through, trying to push through that key level that has been acting as what? Resistance, but failed. It was rejected, resisted right there, and we are seeing the push to the downside. That is a heavy rejection. We are having the green light that the next move, the next immediate move, will be a push to the downside, a solid bearish candle for tomorrow. Okay, for tomorrow. So for the sterling pounds against the New Zealand dollar, we have a sell opportunity here, and we are going to place our order. How do we do that? Well, this is it. Let me reduce this chart again. We are going to place a sell stop order 5 pips below the pin bar. I repeat, 5 pips below that fake breakout candle, and our stop loss will go a few pips above the 50% of that candle here. So let me just place that order. Let's determine the low of this candle and calculate 5 pips of that. The low of this candle is 1.9159 level. Okay, so 5 pips below will be 1.9154 level. Okay, so 1.91554 level, or even at 55 level, you just leave it there. Then 50% of this pin bar, just say you don't need to be that accurate. Okay, just 50% of the candle itself, 5 pips above the 50% of that candle. Let's assume this is the 50% right there. So we are going to be placing our stop loss 5 pips above that level. So let's just assume this is the stop loss level, just somewhere right there. Okay, that is it. We are ready to place the trade right now. How do we do this? We need to calculate our lot size. It's very important, guys, very crucial to always, I repeat, always calculate your lot sizes. We need to determine what percentage of a risk we want to take on this trade. Are we willing to risk all of our account balance on this trade, or we are just willing to risk a certain percent? Well, as you probably know, we Hector traders, the price action traders, our money management principle is not to risk more than 3% of our account balance. Okay, if we are risking, it should be between 1 to 3% on a single trade, on one trade. Okay, so on the sterling pounds against the New Zealand dollar, we are risking 2% on this trade. So I'm going to apply the money management or the lot size calculator into this chart, but before then, let me take out this indicator. Just give me a second. But before then, we need to determine the distance in pips from the stop loss to the entry level. Again, you need to assume I am going to take my crosshair tool from that level right there to where I have the entry. It's about 191 pips. It's about 191 pips. I repeat, 191 pips. That's the distance from my stop loss to my entry. So I'm going to apply the lot size calculator. That's the lot size calculator, a very important tool. I use it on all of my trades. So stop loss value 191 pips. Remember, that is just by the screen. I am risking how many percent? 2%, and that's all. That's all of the job that you need to do. The indicator will tell you the recommended lot size for this trade. Okay, so I'm going to hit my OK button right now. That's it. And the lot size calculator is already recommending 1.04 lot size. Okay, without you have to do all the calculation looking into your account balance. The indicator itself will be able to read all of those details and recommend a lot size for you. So 1.04 level, I am going to place that trade right now. Trading new order. It is on the sterling pounds against the New Zealand dollar. It's a pending order. It is a sell stop order. At what price? That's the price right there. 1.9155 level. 1.9155 level. How about the stop loss? This is the stop loss right here. 1.9342 level. 1.9342 level. That's it. Okay, so I'm going to place the order right there. The order is now placed. Take a look at this. There is no profit taking level. Okay, we have not set any profit taking level. That is the strategy on its own. It is crucial for you to place your stop loss. Very important that the stop loss is in place, but you can leave your profit target open. Price can just crash to the downside in your favor, and you can make all of that many pips, just like what we made in the euro against the sterling pound today. So we are leaving the profit target open level. Sorry, I'm really getting ahead of myself right now. We are leaving the profit levels open. The trade plan here is to wait for the first daily candle to close. If we are lucky to get this push to the downside, we are going to close out 50% of our profit. Okay, right there as that candle close, we are going to trail our stop loss to a break even position. So this trade now sits at a risk-free entry. Then we will wait for the second candle. If we get another push, usually they move in 2 days or 2 weeks, depending on the time frame you find that set up, then we will close the remaining 50%. Okay, we'll close the remaining 50% of that trade, and that's a total of 100%. Okay, so this is the trade setup. Everything is intact. The trade plan has already been developed and analyzed, and we are placed to trade. So we are now waiting for the market to do its own thing. Hopefully by tomorrow we will get price push in our direction. Okay, all right, so that's basically all for the sterling pounds against the New Zealand dollar. The trade has been placed. We are now waiting to see if this trade is going to be one of our bread and butter. Okay, all right, that's it. Let's move on to other pairs. We still have a lot to analyze, so let's go through them one after the other. All right, the sterling pounds against the Canadian dollar. This is the daily time frame. We are having another green light here. That price is going to push down for tomorrow on the sterling pounds against the Canadian dollar, but we are already involved in the sterling pounds against the New Zealand dollar. So we are really not going to be trading correlated pairs, because there is sterling pounds right here, there is sterling pounds right here. So we are not going to take this one here. All right, like I said, if you must trade this, you want to be looking for short entries. This pair is looking to the downside. Price is likely to push to the downside by tomorrow. All right, a similar one is the euro against the US. Oh, sorry, that's not a similar one. We took a trade in the euro against the Australian dollar in the daily time frame with that fake breakout. Well, our entries weren't triggered, but at any rate, you need to be aware that price is trading around a heavy level of resistance. At this point in time, we are going to delete that entry. Simply delete that. No trade was taken, no harm was done. So we are out of this trade. We will keep watching to see what happens to this key level of resistance. For now, nothing to trade. The sterling pounds against the Swiss franc. This is a fantastic, it would have been a fantastic trading opportunity if not for the risk reward ratio. Okay, remember we had analyzed this pair many times before, where we were talking about this sell zone, looking for that reversal candle around that key area of resistance. But as you can see, the price really pushed too far away in a manner that the risk reward ratio becomes very bad. Okay, very bad. It's a nice push. It is looking absolutely bearish, but we cannot get involved in this trade because of the risk reward ratio. Usually the first profit target should be somewhere before hitting the previous swing low, because this previous swing low can act as support. So if you place your sell stop order a few pips below that pin bar, I am sorry, we might be trading against that level of support. But again, we are only being cautious here. We are only being very careful. If you are a Superman, why not? This is a solid bearish candle, giving us the hint that tomorrow is going to be a solid push to the downside in the sterling pounds against the Swiss franc. Well, we have already taken the trade in the sterling pounds against the New Zealand dollar, so we are not going to be regretting not taking this trade, because we are already involved in a sterling pounds cross. Okay, sterling pounds against Swiss franc and sterling pounds against the New Zealand dollar are both correlated, so you should trade just one. All right, so that is it. This pair is pushing to the downside, looking absolutely bearish. This is a solid reversal candle, but the risk reward ratio is quite poor, so we are not taking that trade. Similarly, the sterling pounds against Australian dollar. This is the daily time frame. Price is trading around key level of resistance right there. The chances are that price will be pushing to the downside for tomorrow. So if you are ready to trade this pair, please only look for short opportunities. Although it is not a very good reversal candle yet, but it seems price is likely to push back down. Maybe we will be seeing a range formation. All right, and if we are going to be seeing a range formation, this is an optimal zone to search for short entries back down to this next level of support. All right, Australian dollar against the New Zealand dollar, another bad one with a very bad risk reward ratio. We did analyze this before. This key level of resistance, you can see how price has given us the breakout pullback, and the continuation move is actually happening, but the reversal candle moved too far. Okay, it moved too far, putting the risk reward ratio into question. So we are actually not taking this. Remember, we have the sterling pounds against the New Zealand dollar. New Zealand dollar is also common. New Zealand dollar here, New Zealand dollar here. So we are not taking this. If you must trade this, despite the poor risk reward ratio, well, you should be searching for a short opportunities. All right, the euro against the New Zealand dollar, this is a similar one. You can see how price is bouncing off that key level of resistance. This is a very bearish candle that has been rejected off that level of resistance, but it is not a highway free of traffic. You have this here as support. You have this area here also as support. So the room in this trade is not really fantastic. It is not a great room. It is a congested area, so you need price to move away from that point. Okay, all right, that is that for this. Let's look into the next one, the American dollar against the Swiss franc. Well, finally price bounced off that area that we were talking about. We have analyzed this before, where we talked about this area being the possible and the best point to look for short entries in the American dollar against the Swiss franc, and price went all the way to retest that point. We are now seeing the bounce. Well, although we are not interested in that bounce, it has already happened. I just want to show you how price respected that counter trend line that we have been analyzing for some time now. In my opinion, price is going to hesitate a lot around this area, even till the end of this month, because we are following this in the monthly time frame. See how price has broken below a key level of support in the monthly time frame. So we might be undergoing the congestion process, and that is the congestion bar. So once price closes this way, by the end of this month, we'll be happy to place our sell stop order and our stop loss just above. Okay, for some nice pushes again to the downside, 2 candles as usual to the downside. So it's a solid trading opportunity coming for us over the monthly time frame. So let's wait for this month candle to close. And if that congestion candle is going to hold true, that means within the daily time frame and even the shorter time frame, we are going to see some ranging price behavior around this area. So it's going to be range all through, price coming down, pushing down, going back up again. Okay, that is what is likely to happen. All right, the New Zealand dollar against the Canadian dollar. Well, this one here, I just want to tell you to avoid trading this. Okay, there is no room, really no room, so just avoid trading this. Besides, we are looking at the weekly time frame to see how this candle will close. Okay. All right, and I think that is basically all. No need to waste your time. The only trade that we have taken here is that coming from the sterling pounds against the New Zealand dollar. So that's the only trade we will keep. Nothing else. Okay, thanks for being here. I hope you enjoyed this video. If you have questions, contributions, please feel absolutely free to post them in the live chat window in the live trading room, and we will discuss over there. Okay, see you tomorrow before the London market opens. Bye for now.